The first rule for starting investing money is also the most straightforward. Buy low, sell high. It may seem blindingly obvious. You may raise the question of why anyone wants to do anything else when investing, or be surprised when thinking about how hard it is when practicing. Investing's a discipline. It depends not only on astute analysis and great luck, but also on people's behavioral comebacks. What's your plan if you consider investing with what you have now? Do you have any background in it? With much previous experience, it can be easier to say how to invest your money. You don't even need thousands of dollars to start investing. It's an essential tool when it comes to working toward financial independence. Let's walk through some simple steps to financing with a bit of money you own now. Time for the video. Number 1. Invest in yourself. You may have the burning desire to know how to replicate the performance of the world's ultimate investors and learn how to start investing with little money. Specifically, you may desire to turn a small amount of money into an account balance with 2 commas in a quick fashion. Those investors are genuinely gifted, and the exception to the norm in reality. It's essential to study how to start investing young. If you look into the common trait these legendary financiers share, they follow a systematic and disciplined approach to investing every time. Also, they're well read about how to invest in yourself. In that case, they learned how to gain a genuine appreciation for studying the stock market and its players. These high-income skills have always attracted significant returns over time. The discipline of investing, style, time frame, or philosophy, these great investors in your investment portfolio is critical. You must identify your style, budget, and risk tolerance before entering the work. Logical transactions, informed thinking, and control of emotions, especially in decision-making, are significant actions that must take with discipline and a deep study. These are the essential elements required for investing success with a small amount of money in your hand. Your investing style is just a means to a good or bad end. The pattern or style of investing is developed later. If you plan to invest, you should focus on these essential principles and learn to stick to those principles during both good and bad times. Number 2. Develop your investing approach. When investing money, you must cure the disappointment of not knowing any shortcuts to overnight investing success whenever you discuss developing your disciplined investing approach. Investing is not an easy task, but at the same time, it doesn't have to be a frightening endeavor. If you invest wisely and consistently, it helps you to comfort your retirement at a reasonable age and work into your ideal years out of necessity. We all wish to have a comfortable present life and retirement at the end of the task. And why shouldn't we make intelligent decisions to get there? With that sense of work, we can have a formal education in finance. For that, we have to follow a few steps for gaining familiarity with investing, like reading a lot about the stock market, looking into individual companies, considering investing in index funds and mutual funds, building your own business, and so on. When talking about readings on the stock market, you can begin with reading reputable stock market investment websites that discuss market activities. It sounds logical. As you read more, you'll be able to more likely piece together content, and you can build an idea about the markets and companies in them with your thinking. The most important reminder is, building your understanding of the stock market or the field won't happen overnight. Gradually, with your studies, you'll come across individual companies. You can start with 5 companies you admire in different industries for research. You can grab strategies, competitive advantages, and core values from each firm. In this study, you should recognize the facts that set these companies apart from their peers, the forecast for the markets in which they operate, and the way the stock market values the companies. Investing in index and mutual funds is a different strategy that can be used when you need more confidence in selecting individual companies to outperform the market. Exchange-traded funds, which are ETFs, mutual funds, or some combination of the better target date funds, can be done under the step. Invest in your own business. If you already have an entrepreneurial mindset or are interested in building your brand, you can invest a little money in your own business. Invest in real estate too. Real estate investments can be considered one of the old investing methods, which is a relatively easy thing to do. You can also try peer-to-peer lending platforms as well. Number 3. Start investing money. Thanks to many new brokerages on the market, you can find thousands of options for starting to invest, even if you only have a small amount in your pocket. Fractional shares to invest your money is one option. In this case, it means you can buy a smaller portion with the amount of money you're ready to invest and your desired investment rather than leaving over $3,000+ for a single share of Google. You can contribute in increments as small as you can afford, as the best brokers and robo-advisors also avoid charging trading commissions for your investments. You can try out financial apps for young adults or anyone looking to invest money. Public.com, M1 Finance, and Acorns are popular financial apps that you can try. The concept of investing in your own business can be your own freelance company or just walking dogs. The idea can be a bigger one or a very simple one, but a small investment is always a great start. If you have your own business in the journey, you can invest in a website or flyers and supplies and a domain to advertise your business. Investing in a pension and opening a high-yield savings account is some everyday and only little advanced actions that you can quickly run. There are some safe additions to the conversation on investing money. More than that, you can step into the real estate market also. Real estate crowdfunding is a new investment category because you own fractional shares of a large commercial property without being a landlord. You can lend your money to individuals directly by using peer-to-peer lending platforms in the journey of investing money. Peer-to-peer lending is convenient for borrowers and profitable for lenders. Number 4. Take action. Once you're ready with a great background idea of the overall market's activity and analyzed a set of attractively valued companies, you're all set to continue. Stand out from the rest, and it's your time to pull the trigger. Invest in low-cost index fund exchange-traded funds using a robo-advisor or a self-directed broker for safe content. Then continue following the companies in the stock market is also essential for your progress in investing. With your due thoroughness, you'll be able to follow these companies and observe their performances as you expect. In situations and decision-making that cannot be acceptable, you can cut your losses short and then move on. In creating your own business, you can try on what you enjoy. It can go a long way easily after turning it into a business. It can be minor initially, but the money will grow like in stock investment and compound. Keep in mind to save a portion of your business's profit back into the company for continued growth and customer gains of your company. Mitigating your risk in investing money is a fundamental fact you must consider in your investing journey. It is always better to diversify your assets as much as you possibly can. Don't put all your eggs in one basket. That automatically falls you at risk. Spreading your cash across different fields, companies, countries, or market sectors may level out any price fluctuations in any situation. Someone can feel investing small amounts of money every month has no real purpose. But after 20 or 30 years, you will have a significant pot that you can peacefully celebrate. Investing is for long-term activity. Investing your money in a pension is a great way to adhere to this. If you don't know about doing business, investing in the stock market, or in the real estate market, or even operating a finance app, you can invest in your pension for a much better future. Real estate crowdfunding is also a great approach to learning about commercial real estate investing, as well as diversifying your assets. It's an attractive alternative investment that you have a physical element to handle. Prosper and KuCoin are the most popular peer-to-peer lending platforms currently on the market. However, you can carry on peer-to-peer lending activity if you can manage high returns, more significant risks, potential hacking attempts, or immaturity and are comfortable with this risk-to-reward ratio. Investing creates enriching experiences in your life. It can be a moment of buying your first home or growing your assets enough to purchase your next car. You can lead a financial peace of mind by developing your disciplined investing approach with a reasonable and informed decision-making practice. Learning to invest wisely with a very small amount of money at a young age will compound to work and benefit you in the future. It will create better scenery in building your wealth. You may not become the next Warren Buffett, but you may approach better than the present.